income, inequality, unequal, distribution, opportunity, be likely to, secure, wealth, the rich, investment, asset, return, globalization, reward, reduce, widening gap. Income inequality is a complex issue driven by a combination of factors. One key factor is the unequal distribution of educational opportunities. People with access to high-quality education are more likely to secure well-paying jobs, while those with limited education opportunities remain in lower-paying positions. Another factor is the unequal distribution of wealth, where the rich have greater access to investment opportunities and assets, leading to higher returns. Technological advancements and globalization also play a role by rewarding highly skilled workers while reducing opportunities for lower-skilled workers. These factors combine to create a widening gap between the rich and the poor. Globalization, growth, opportunity, contribute to, widen, income inequality, expand, developed country, benefit from, expertise, job displacement, outsourcing, foreign investment, benefit, the wealthiest sector, exacerbate, disparity. Globalization has led to economic growth and increased opportunities for many, but it has also contributed to widening income inequality. As businesses expand globally, high-skilled workers in developed countries benefit from increased demand for their expertise, while low-skilled workers face job displacement due to outsourcing and automation. In developing countries, globalization often leads to increased inequality as foreign investment tends to benefit the wealthiest sectors. The increased flow of capital and trade has created greater economic interdependence, but it has also exacerbated disparities between different income groups both within and between countries. Determine. Earning potential. Secure. In contrast. Disparity. Afford. Private tutoring. Extracurricular. Perpetuate. Across generation. Compared to. Less privileged backgrounds. Education plays a critical role in determining an individual's earning potential. People with higher levels of education tend to secure better-paying jobs with more benefits. In contrast, individuals with less access to quality education often find themselves in lower-paying, less secure jobs. This disparity in educational opportunities contributes significantly to income inequality. People from wealthier backgrounds can afford private tutoring, better schools, and extracurricular activities, while those from poorer backgrounds often struggle to access the same resources. This creates a cycle where income inequality perpetuates itself across generations, as children of wealthy families have greater chances of success compared to children from less privileged backgrounds. Rapid pace. Profound. Distribution. Artificial intelligence. Replace. Manufacture. Retail. Meanwhile. Finance. Benefit from. Shift. Labor market. Reward. Leave behind. Expertise. Capital-intensive nature. Accrue. Further. Widen. Income gap. The rapid pace of technological advancement has had a profound impact on income distribution. Automation and artificial intelligence are replacing many jobs that once employed low-skilled workers, such as in manufacturing and retail. Meanwhile, high-skilled workers in fields like technology and finance are benefiting from these advancements. This shift has led to greater income inequality as the labor market increasingly rewards workers with technical skills while leaving behind those without such expertise. Additionally, the capital-intensive nature of new technologies means that the owners of these technologies, often the wealthiest individuals and companies, accrue even more wealth, further widening the income gap. Major causes: income inequality, concentration, a small number of, corporation, accumulate, asset, stock, real estate, generate return, investment. In contrast, lower income bracket, fewer opportunities. The rich remain stuck in cycles of poverty, diminish economic mobility. One of the major causes of income inequality is the concentration of wealth in the hands of a small number of individuals and corporations. As the wealthy accumulate more assets, such as stocks, real estate, and business interests, they generate greater returns on their investments, further increasing their wealth. In contrast, individuals in lower income brackets often have fewer opportunities to invest and save, which limits their ability to build wealth. This concentration of wealth leads to a situation where the rich continue to get richer, while the poor remain stuck in cycles of poverty. As wealth becomes more concentrated, it diminishes economic mobility, making it harder for individuals from lower income backgrounds to improve their financial situation. Tax policy: mitigate, exacerbate income inequality. Progressive: reduce, tax cuts, tax loophole, offshore tax haven. Enable, corporation, fair share, revenue, intern, welfare, widen, accumulate, burden. Relative to. Tax policies play a crucial role in either mitigating or exacerbating income inequality. In many countries, progressive tax systems are designed to reduce inequality by taxing higher incomes at higher rates. However, tax cuts for the wealthy, tax loopholes, and the use of offshore tax havens can enable the richest individuals and corporations to avoid paying their fair share of taxes. This reduces government revenue, which in turn limits the government's ability to invest in social programs such as education, healthcare, and welfare that could reduce inequality. Ineffective taxation policies contribute to widening the wealth gap, as the rich continue to accumulate wealth while the poor face a heavier tax burden relative to their income. Labor market factor: certain industry, finance sector, retail, hospitality, agriculture. Command higher wages. Receive, gig economy, classify, independent, contractor, rather than, employee, lack, paid leave, exacerbate. The labor market is a significant factor in the creation of income inequality. High-paying jobs are often concentrated in certain industries, such as finance, technology, and law, while lower-paying jobs are more common in sectors like retail, hospitality, and agriculture. Even within the same sector, workers with higher levels of education and experience are able to command higher wages, while those with less experience or education receive lower pay. Additionally, the rise of the gig economy, where workers are often classified as independent contractors rather than employees, has created a situation where many workers lack benefits such as health care and paid leave, further exacerbating income inequality. Income inequality issue. Not only A but also B. Global wealth gap. Widen. Reap. Remain trapped. Poverty. Exploitation. Opportunity. Corporation. Across borders. Deprive A of B. Revenue. Catch up. Exacerbate. Income inequality is not only an issue within individual countries but also between them. The global wealth gap is widening, with wealthier nations reaping the benefits of global trade, finance, and technology, while poorer nations remain trapped in poverty. Globalization, while benefiting developed nations, has often led to the exploitation of resources in developing countries, leaving them with limited economic opportunities. Additionally, multinational corporations that operate across borders often avoid paying taxes in the countries where they do business, depriving these nations of much-needed revenue. As the global wealth gap continues to grow, it becomes increasingly difficult for poorer nations to catch up, exacerbating global inequality. Shape. Distribution. Robust. Social safety nets. Universal. Affordable. Unemployment benefit. On the other hand. Progressive. Social welfare. Concentration. Equitable. Conversely. Inadequate. Regressive. Deepen. Divide. The social and economic policies adopted by governments play a major role in shaping income distribution. Countries with robust social safety nets, such as universal healthcare, affordable education, and unemployment benefits, tend to have lower levels of income inequality. On the other hand, countries that have less progressive policies, such as inadequate social welfare programs and limited public services, often see a greater concentration of wealth. Effective policies that focus on reducing inequality can help provide greater economic opportunities for all citizens, ensuring that income distribution is more equitable. Conversely, inadequate or regressive policies can deepen the divide between the rich and the poor. Cultural factor. Societal. Attitude. Belief. Emphasize. Fairness. Distribution. Social norm. Reinforce. Accept. In contrast. Prioritize. Equality. Advocate for. Redistributive. Narrow. Cultural factors, including societal attitudes toward wealth and success, can also influence income inequality. In some cultures, there is a strong belief that wealth should be concentrated in the hands of a few individuals, while others emphasize the importance of equality and fairness in income distribution. These cultural beliefs often shape government policies, business practices, and social norms that either reinforce or challenge economic inequality. For example, in societies that value individual success over collective well-being, income inequality may be more accepted and even encouraged. In contrast, cultures that prioritize social equality may advocate for more redistributive policies to narrow the wealth gap.